Welcome to the CFO Track podcast, where we inspire and educate future finance leaders to help them stay on track to CFO. I'm your host, Tom Hunter, and every week I'll be bringing you stories from some of Australia's best and brightest CFOs and the lessons they learnt along the way. My goal for the podcast is to provide learning and development opportunities for those wanting to get to the level of the guests on this show, but they just didn't have the access to those lessons otherwise. Let's get into it. On today's episode, I'm speaking with Ben Watiwat from Immutable, Australia's largest Web3 gaming platform with a valuation well over $3.5 billion. Prior to his current role, Ben spent a lot of time with some of Australia's fastest growing tech businesses, with a lot of them reaching unicorn status. Ben's a pro in the capital raising space and shares heaps of helpful advice around Series A, B, and C funding. So if you're looking to raise capital, this is one you don't want to miss. So here we go. Ben Watiwat, welcome to the CFO Track podcast.
Thank you. Happy to be on the podcast.
Absolutely. How's the week been?
Can't complain. I think it feels like hopefully a downhill run into Christmas, but I feel like living in startup world, the next U turns around the corner, but so far so good.
Absolutely. We got here in the end. We had a little bit of back and forth, but we finally got here for the recording. It's fun to get here.
No, indeed, it's a bit of a journey. Just like I think that this year has been a bit of a frantic one for everyone.
Nice. So I've given the listeners already a bit of an intro about yourself and the business. It'd be great to hear it from yourself because I never do it justice. So can you give an overview of yourself and the business at the minute?
Yeah, absolutely. So at the minute, I'm SVP Finance here at Immutable. So Immutable is a company that specializes in gaming technology. So originally, very much specialized in the crypto and Web3 space, but now we are broadening out to focus on all gaming studios, not just the crypto and Web3 space. Been at Immutable for 3 years, and then and came in as a 2IC, and then effectively stepped into the main finance role in July of this year. The Immutable itself is one of Australia's unicorns. Raised $200 million US at a $2.5 billion valuation back in 2022, and has been on a very, very substantial glide path over the past few years.
Awesome. Well, we'll definitely come back to that because it sounds very exciting. But first, we'll go back to the start. So, what was it about accounting that drew you to the career?
So, funnily enough, I actually was an IT nerd in a previous life. So, I initially, when I was going through kind of the HSC and high school and all that stuff, I love computers. But then I took a role in the IT industry, and this would date me a little bit. Was working on things like dial-up or 56K modems and ADSL modems. So very much in the hardware space, and realized that IT was it was something that I liked as a hobby rather than something that I liked as a career. My dad's a bookkeeper. I thought I'd try accounting. Did that, went to university and took and realized that I was actually kind of good at it in terms of, I was able to pick it up relatively quickly. And took my first grad role at Deloitte. So made a conscious, so in audit, yes. So made a conscious decision that I wanted to work in the smallest company space, but at a Big Four. So put in the application for what was called Growth Solutions back then, but now probably used to be Deloitte Private. So very much focus on the small to mid space, but with a Big Four lens on it.
Gotcha.
And I think the reason for that was, I wanted to kind of have it. I didn't want to be one of like 100 auditors on an audit. I actually wanted to, have a little bit more exposure to, how businesses work at the coalface, and the layers, the teams were, 2 to 5 people. From an audit perspective, the audits were 2 to 3 weeks. So you're able to see a lot of different businesses in a very short space of time.
Sure. And so following that, you transferred internally to M&A or corporate advisor or something along those lines?
Yeah, correct. I had a fairly frank discussion with the partner at the time saying, I'm kind of getting bored. I want to do something else. And I was, I was lucky enough that they said, well, why don't you corporate advisory go? So transferred into, Deloitte Private's corporate advisory team. So this was the mid-market advisory team. So anything up to an enterprise value about 200 to 400 million. And it ran the full gamut of both buy side and sell side, but predominantly transaction due diligence.
Okay. So what did you take from that experience? Because lots of people try to get into it, but aren't successful or anything along that. Like, what did you take from it from a commercial standpoint?
I think it applies for both audit and corporate finance, is that, and specifically transaction due diligence, you have this ability to look under the hood of a lot of businesses in a very short space of time. And I think what you start to see are commonalities around, how successful businesses are run, the right things and the wrong things, the things core underlying financial metrics. So how do you look at EBITDA, for example? How do you look at net working capital?
Yep.
How do you look at those things that become arguments during an M&A process? Generally relate to working capital because it's the last thing that we discuss as part of an M&A deal.
Hmm.
And all of those different underlying factors, you get thrown in the deep end very, very quickly, but you pick up a lot in terms of
Yep.
not just through the work that you do, but just through the intellectual osmosis that you get by working with like a really core nucleus of really smart people.
Yeah, gotcha. And would you advise anyone else to take a similar path? Because it's pretty competitive, isn't it?
Oh, absolutely. I would say I think if you want to get that commercial overlay, right,
Yep.
I think the pathway, I like the pathway because you get a technical grounding from an audit
Mm.
perspective that gives you
Yep.
just your core. But corporate finance and the like gives you that extra roundedness in terms of
Mm.
making you a better controller, making you a better finance professional
Yep.
than if you had just stayed in audit. Like if you can get
Yeah.
that breadth of experience, it serves you really well over the course of your later years.
Yeah, gotcha. So let's say that someone has just qualified, they're in audit, but they want to make that transition and they aren't able to make that transition internally. What would be your recommendation? Should they wait until the next cycle? Should they go to an A corporate advisor for another firm or just jump out into commercial anyway?
It would depend on what their motivation is in
Yeah.
terms of getting into corporate finance. Like I know that some people just go look at it because it's as a shiny
Yeah.
career. It sounds great, but I would say it really depends on what your kind of career priorities are. So
Yep.
if you think that you're better, audit generally is you generally spend 3 to 4 years in there and then you're done. So it really depends on where you are in your career journey. If you feel like that you want to do something, you need a
Yep.
little bit more seasoning, or you want to get just a little bit more experience, then
Mm.
I would try and find some type of advisory role, or at least. But at the same time, you can get a similar type of experience, similar type of gain at the right company if you're coming
Okay.
in as a finance professional. So again, I think it's less about the firm and the less about the thing, but more about the experience or the role that the role that you can move into.
Yeah, gotcha. And then so you finished up there and moved into the role with Vocus. So what was that initial period like for you?
Yeah, so the funny thing is that Focus was actually a client of both
Okay. Yeah.
of Deloitte at the time. I actually worked on both their pre-listing audit
Okay.
as a junior burger auditor, and then
Yeah.
I did a lot of their corporate advisory work as in corporate finance. Yeah, I think when the time came with Deloitte 4.5 years, I felt like okay, I need a change, and
Mm.
Focus was one of those companies that said, yeah, we want to bring you along.
Yeah, cool. And it's a pretty significant growth period for the business as well, right? And you were there for just under 5 years?
Yeah, so just under 5 years again. So when I joined, we were 50 people. We had about 100, and I think it was maybe $30 million in revenue, maybe 50.
Right.
And then, I think over the course of that 5 years, through both organic growth, acquisitions, fundraising, we grew to, at its peak, it was valued at 5 billion. It's
Wow.
as an ASX listed company. We had 2,500 employees and, a business spanning, multiple countries.
Yep.
Very much got the flavor of what a startup rocket ship looks like,
Yeah.
but and with the overlay of having a listed context over the top, which adds its own complexities.
Yeah, gotcha. And so during that time, you progressed through a couple of roles. What was the progression path like initially? Was it what you expected would be?
Yeah, so I think the titles were one of those things where I say this at every startup, the titles are generally meaningless. It's like whose line it is anyway.
Yeah,
The
yeah,
points don't matter.
yeah.
It's really about the breadth of experience that you can gain across those different moving parts. So I think from day one, I was largely doing, I was largely 2IC and running a lot of the non-FinOps
Mm.
type work. So it was anything from tax to treasury, external reporting, derivatives, hedging, pretty much anything that we just needed a bit of extra horsepower to.
Yep. Yep.
And all of that just came through as just it was just one of those things where you just put your hand up because in a capacity constrained environment where you've got a small team, you just got to do the work.
Yeah, gotcha.
And I think what we ended up doing was, we were acquiring a company every like 6 to 8 months. We
Right.
were refinancing our bank every year. We were doing a
Yeah.
capital raise probably every 18 months. So very, very high velocity type work, and always, and it's effectively just making sure that you can just do a lot of context switching,
Yep.
a lot of different priorities all happening at the same time. It's not for everyone, but I think
Sure.
if you're of a view that you want to work in more of a commercial type finance lens, those high growth companies are always the way forward.
What do you find being the major difference between that and an I guess, a slower pace business from a development standpoint, exposure, work-life balance, obviously, stress, all the rest of it. How do you think that works through?
Yeah, so I think most high growth businesses, again, the analogy is that you're building the plane as you're flying it.
Sure.
So, you're a lot of, I think of, I wouldn't say slower, but I would just say more mature businesses
Sure.
are very much around the fact that, things are constructed in a way that is controllable and maintainable and,
Yep.
and you have a checklist and you follow a
Yep.
checklist. I think the crux of kind of high growth companies is that you're still building it and and you can't necessarily aim for perfection. You 80/20 is the best
Yeah.
way forward. So there's always going to be, and I joke about it, there's always going to be future Ben problems
Yep.
because these are things that I need to solve. I know they're going to be an issue, but there's stuff that I can't really solve right now. And I think
Yep.
that constant trade-offs is probably the difference between, say, a high growth role versus something that's a little bit more established. The trade-offs in, say, a more stable business is very much around, this is my budget envelope, this is what we do.
Yep.
Where the constraints that exist in a high growth company are, I have 6 or 7 different things I need to do at once, and I just need to make a call. So there's just I just think it's a different type of problem and just
Right.
different constraints and limitations between the two, and just the dynamicness of it and the ambiguity that exists.
So how do you manage that expectations then? Because there will be some stakeholders or some partners, so the PE investors, etc. They'll probably want 100% accurate versus the needing it now. How do you manage that expectation, both internally and externally?
So I think it's the core to that is probably around looking at what are you trying to report? There's things that are material, there are things where materiality does exist, and there's things that
Yeah.
are not necessarily material.
Yeah.
And to take an audit lens, materiality is your friend.
Yep.
And again, you don't sweat the small stuff. You make sure that you are focusing on what are those high value items. So,
Mm.
if you're working on something for the tax office, there's no materiality there. So you want to get that right. If there's a request from, one of your business leaders, it doesn't need to be absolutely exact or can it be directional?
Yep.
And I think part of the expectation management process is got to be around how do you actually asking the pre-framing questions first.
Mm.
So, understanding the brief, understanding what the use of any data or what the questions are for, if you've got the time, in order to give people the view that they need with the context they need and the accuracy that they need, invest the time up front.
Yep. Gotcha. And so then you finished up your time there and started your focus with telecom, right? From memory?
Yeah, correct.
Yeah.
Telco.
So your next role was your first step into the tech and SaaS world, and you've been there since. Was that a deliberate step?
Yeah, so I think it was one of those things where we got to that 2,500 people and it got big. We were a small company where, we knew everyone. It was in a small office, everyone pulled together. And I think we got really big and it just started to not be fun anymore
Sure.
in terms of I like working in that small company space. So, I probably got to that decision point and said, hey, I'm interested in thinking about other opportunities.
Mm.
Ended up just reaching out to a few people that I met along the way, and was recommended that to go talk to the guys at Safety Culture.
Yeah. Cool.
So I made the jump there in, I think it was 2017 from memory.
Yep.
And that was in Safety Culture. Was one of Australia's unicorns. It's initially a humble checklist app, but now very much a platform around workplace safety.
Yep.
And I joined. We were about 80 people. They had just done a Series B, first kind of senior finance hire, and really just with the remit to help scale the business as it continued to grow.
Yeah. And so you took it through to the Series C at the time as well, right? So what happens leading up to that? Because it's a significant period.
Yeah, so I think that the crux of it is around just getting the basics in place. So I think the way I always look at capital raisings, and there's a couple of different lenses, but the first thing I'd say is the moment you raise a capital raise, yes, it's a time for celebration, but it's also the work starts again.
Yeah.
Because the moment that you've raised a round, expectations reset to zero. Anything that you did prior to that raise doesn't count. It's all about what you do going forward.
Yep.
So I think when post Series B, I think everyone it was very much just how do we get some of the financial nuts and bolts. Like we were functioning, we're able to pay bills, but it's like, how do we get to that next level? So, getting more visibility on, P&L and spend, getting the analytics right, getting the data right, getting our forecasts up and running. I think also just because it was a smaller company, taking on some of the other adjacent roles from an ops perspective. So things like IT and risk and and legal. You ended up taking those on as a result, but very much all around that, all around just having the platform so you have the narrative when you go out and raise. So,
Yeah.
we were lucky enough to have, a great fundraising founder in Luke. So, he's able, he's a very strong seller and a very strong fundraiser. For us, from a finance perspective, it was about how do we support that narrative? How do we make sure that, we are able to, when we get into DD and we get into the nuts and bolts of an investor reviewing before they make an investment decision, how do we get them over the line?
Yeah. And then post that receiving of the money, well, what does the business growth look like for the next, I don't know, period of 90 days, 120 days? How metric you want to use?
Yeah, so I think it's one of those things where in a lot of cases, it does cause a lot of, like, fundraising does cause a lot of founder distraction.
Yeah.
So, you can see in a lot of cases where we have, you do a fundraise, the pedal comes off a little bit in
Sure.
terms of, up to, because you've got a division of time. But what I would say is, like, as that reset happens, you then see a reacceleration. Again, that depends on, it depends on the company, it depends on the sales cycle. So it's not necessarily a guarantee, but in a lot of cases, you see that acceleration happen.
Yep.
In terms of kind of actual growth rates, it really depends on the state of the business. In a Series A business, you could be growing 10, 15, 20% month on month.
Sure.
In a much larger business, that number in relative terms could be smaller, but it's a larger quantitative amount.
Yep. Gotcha. And then, so the role finished up bit after then, and then you took your first CFO role with Silver Heritage.
Yep. So that was so Silver Heritage was a surprisingly enough, I wasn't expecting to take a role like that. But so the backstory behind that was the founder of Vocus, was that formative experience, but was the chairman of Silver Heritage. And, came over and said, "Hey, I'm looking, we've just done a recapitalization. I'm looking for a new CFO. Are you interested?"
Yeah.
And, I think as someone who's worked in, Australian capital markets, I think ASX listed CFO, even though it's a small cap, it's, it's one of those caps in the hat that you want, feathers in the cap that you want. Took that role. Silver Heritage itself is a gaming business, so they own physical casinos in Southeast Asia. So the other attraction was, I'd never really done much in the way of corporate travel. I mean, now that I've done it, I'm like, I don't need to do it anymore. But it was it was a good idea when I was a bit younger, and at the time, just traveling through kind of Nepal, Vietnam, Cambodia, Hong Kong, and the like. So took on that role. The business had just done just done a recapitalization, and effectively was looking to kind of execute the next stage of growth. It had just built some new facilities and was looking to, how do we eke out that initial incremental. The role itself is, very much very much a combination of both very on the tools and, getting into the nuts and bolts, but also, the capital market side. So, keeping the board and investors happy, meeting external stakeholders, and, just trying to balance those two streams. When I joined, I spent about, I would say, probably 2 months traveling through.
Wow.
Looking at basically traveling to every place, meeting everybody, talking to everybody, and just doing a very detailed diagnostic on the business. So,
when you say every place, where's that entail?
So it was Kathmandu in Nepal, in Vietnam, it was just north of Hanoi. Hong Kong was head office, and then, we had and all of our directors were city based.
Yeah, okay. So decent spread.
I think got all the frequent flyer miles for that period. So I think as while companies are listed and they have disclosure obligations and they do that, obviously you can do your due diligence on a desktop, but nothing can beat actually going in and just talking to people and understanding where the different movements are. So spent that time, prepared a full kind of diagnostic report. It's also and it's something that I would recommend if you're ever going into a CFO role or into any type of senior finance role, is do your own diagnostic once you've joined the business. There's no better way to understand how everything fits together than actually just talking to people and filling in the gaps yourself. There's only so much that you can do just looking at a P&L. Sometimes you need to step out of the accounting cave and go and talk to people.
What specific type of questions should they be asking then?
So I think it depends on who you're talking to, but I always frame these things as, where I look at finance as an enabler or a concierge effectively for both external and internal stakeholders to make them move faster. So I have a couple of kind of boilerplate questions that I ask whenever I talk to someone. The first one is, what is the most frustrating thing about dealing with finance? I tend to find a lot of things just by asking that question, because things that annoy them about finance can also then tend to lead into how this could be some fundamental thing that is causing problems more
Yeah.
broadly. And using the pain points as an ability to try and diagnose issues is always, I've always found high value from that, because people love telling you what they hate about doing things. And
Yeah.
when you talk to enough people, you can compile lists and you can see the commonalities. The other thing is, how do you, asking more framing question, how do you see the business as it, what's your view on the business itself? How do you see it going? And another one that I have value is like, tell me how you think the business works. Because you get different answers depending on who you talk to. You get different answers between which part of the business you're talking to. And I think that helps you then create what is this narrative that you're trying to create as a leader going forward. But also it helps reinforce when you are, if you're in capital raising mode, or, you're talking to your investors, you've got that, you've kind of internalized, what the company narrative is. So, you align it with obviously, the CEO and your senior management, but
Yep.
you need to, it helps you just construct, both that mental model of the business, but also how you then communicate it as a senior leader.
Yeah. So what I do see quite a lot, particularly in the tech or the high growth space, is that very heavily on hybrid or remote working. Now that all sounds awesome, but there's a lot of the time where that is difficult without an in office presence. So when individuals are trying to apply that diagnostic, how do you think they go about it in a more remote setting?
Yeah, I think that's the really hard problem. I
Yeah.
think it's very easy to build rapport when you're talking face to face.
Yeah.
It's much
Yeah.
harder doing it on a video call. And I think that's one of the skills that, people, you kind of have to learn by doing, and doing it over and over again. Like it's
Mm.
not easy.
Yep.
My preference is I like hybrid more
Yeah.
than I
Yeah.
like, I like being in the office 3 days a week. Otherwise I'll probably go stir crazy looking at a screen for
Yep.
40 hours straight. And I like that. And probably around, and also I think there's, if you're more of a fully remote, you need to create those intentionality and those touch points in a different way. One of the companies I work for, we just had a water cooler chat on a regular basis where,
Yeah.
we could
Okay.
just talk
Yeah.
more generally. It would sit in the calendar, you'd
Yep.
drop in, drop out. No one cared. It was more
Yeah.
just,
Okay.
hey, let's have something a little bit more social.
Like a
It
video
doesn't
chat
necessarily,
room.
like a video chat
Yeah.
room.
Yeah.
Exactly. So you try and create these things that are not the same, but
Sure.
a
Yeah.
way to create that
Yeah.
connectivity.
Yeah. Great. And so that first CFO role came along really quickly. Was it 7 or 8 years, maybe 6 post Big Four? What do you think lended itself to progression that fast?
I would say that's probably the breadth of things that I ended up working on across the number of across
Yep.
both the corporate finance and audit side. So I had the technical grounding there. From at Vocus, it was anything and everything. So,
Mm.
getting involved with new system, like new ERP implementations, tax, treasury. It was very much a very wide scope. I think the breadth of that experience is what allowed me to kind of to step up in that role relatively early. I think a lot of the progression that I find and I see is, people eke out through the controllership role, but I think the broader commercial side is where that's the really the key element in order to land that senior role. Is you need to have that blend of both. Yes, this is accounting, but how do you blend that with, how do we make this business better?
Yeah. Gotcha. And then so you ended up moving on to Indebted a couple of years later. And so that was during a really interesting time because I think they were founded only a couple of years prior, a few years prior. And you joined in COVID as well, or back end of COVID?
Yeah. Yeah, exactly. I think it was like October 2020.
Okay. All right.
I think Indebted is a great business. Like it's the joke I like to make is that it's debt collection but without the goons, because it's very much about how do you humanize people. This
Yeah.
is people get into debt, but it's more about how do we treat them the right way. And we found that we actually got better outcomes. People they want to do the right thing.
Mm.
You treat them with respect, they'll treat you with respect. So we, partnered with, initially it was Zip Money here in Australia.
Yep.
And that was a big unlock, and effectively went along and just did a lot of growth both locally and internationally. So we grew by acquisition into the US,
Okay.
acquired a small collections company in the US, and then used that as a platform to start a national business over there.
Yep.
Business has done really well. Did a raise with Airtree earlier this year, and effectively, again, it's one of those foundational roles where you're both making strategic calls, but you're also trying to make sure that the business is being directed in the right way. So,
Yep.
I think of it as, when you've got 50 people in the business, you know everyone, you're able to, able to communicate. You've got that span of control is not that wide.
Yep.
But as you scale, you got 100 to 200 people, your controls become guardrails. So they're not roadblocks. They're not designed, like I don't design things to stop people from doing things.
Oh,
I design things to herd them in the right direction and make sure that,
yeah.
we're all trying to do the right thing here, but we just want to make sure that we're doing that in a way that allows people to keep moving at pace.
Yeah.
So, I think most people, I think a lot of people see finance as this blocker. That's not what we want to be. It's about
Yep.
how do we make sure that we're doing the right thing, but doing the right thing at speed.
Yep. And there's another couple of funding rounds there as well. So you've done it a handful of times across your career now. So if you to put it down in terms of like a checklist or top 3 things that you need to do if you are raising capital, where would you start?
So the first one is key visibility on your metrics. Depending on which industry you're in, know what the benchmarks are and be tracking those well ahead of starting any type of round. Because the moment that, if you're in a SaaS business, what's your lifetime value, what's your CAC, what's the payback ratio, where do you sit on the rule of 40? If you're from a fintech business, it's, what's your gross merchandising value or what's your gross value? And you just need to be aware of like what investors are looking for at your stage and start planning towards that. Because I think
Versus
the worst thing,
competitors or just individual business?
I would say versus the broader cohort. Like
Yep.
I would target what do the best. There's heaps of statistics out there, heaps of different benchmark metrics that people will publish online.
Yep.
Try and anchor to those. So because the worst thing that you can do is you go through a funding round, you're in DD, your investor goes to you, what's X metric, and now you have to go back and reconstruct what it is.
Yeah.
And it doesn't lead itself to making this a slam dunk decision for an investing committee. What you want to be doing is showing them a package that goes, why wait? A lot of that becomes pre-framing in terms of, let's get all the ducks through that we can. Let's get a financial model that we're happy with. And it doesn't necessarily need to be this massive bells and whistles type model. It can be relatively simplistic, but you need to align to what investors are expecting at your stage. If you're a seed business, a one pager with some very basic assumptions is totally fine. But if you're a Series C with, you've already raised $30 or $40 million, the expectations are much higher of the business's understanding of its own function, as well as, the alignment with industry measure.
Yeah. So this is then the opposite true. So the things to avoid is not being well planned, not being across your metrics. Is there anything else that of note?
The other thing I think is going to be, and this is probably one of the key ones, is that it takes longer to raise than you think. So, most people think, oh, well, and this has changed significantly. So I think the last major fundraise was, in the heydays of the 21, 22.
Yeah.
But I think, the perception used to be that, hey, we've got 2 years of runway. We'll start raising at 12 months and then we'll be fine.
Yep.
If anything, you need to be aiming for that 3 or 4 in order to have the time to do it, because investors are much pickier. The cost of capital is much higher. So just be aware of your own timing. So don't leave it too late. The last place you want to be is raising when you need to. You want to be raising from a position of strength. And the third thing I think is going to be around just how do you have, how organized are in terms of your own data, your ability to pull things, your core foundational documents, working with lawyers that are experienced in this fundraising round. They can give you indications. I know that Ansarada, the data room provider, has a big kind of checklist and things that you need to add in a data room, like those kind of things that can be big distractions during a raising process, where really all you want to just you just want that to be ready beforehand.
Yep. And then, so how did the role with Immutable come up then? What trended that?
So there's an interesting one. I think I've realized that Sydney Tech is really small, and you keep running into the same people over and over again. So after Indebted, I just had a kid at the time and decided that I wanted a 2IC role. So I wanted to had a 1-year-old. I want to do something a little bit different. Reached out to a couple of contacts, and one of them reached out and said, "Hey, you need to talk to David at Immutable."
Yeah, great. And
so it just kind of came up serendipitously. But I think the attraction from a Immutable perspective was, it is an industry that is very much high growth, really, really interesting market space. It's something that I haven't done before, and very interested to both, one, focus on my craft and just build just continue to build, but also learn from another good CFO. Like, I think the humility is important. Like, I know that I've done it before, but that's at a smaller scale. I always want to make sure that I'm continuing to iterate and continuing to learn. And it was just one of those things where, it was the right place, right time.
And so how far into the NFT boom did you come in at that point? Because it was going nuts for one point and then it's dropped off pretty significantly as well. So what were you tracking through there?
It was probably 6 months, like 6 to 8 months before crypto winter, for want of a better term, landed. So I think it was like the roll off of the heyday. But I think the funny thing about that is it also, the crypto boom and bust cycles are effectively, probably 3 or 4 times faster than a normal boom and bust cycle. So, it feels like we're in, boom and bust cycle 3 in 3 years. So I think what those things do is it flushes out a lot of your weaker competition, and it also proves that companies with sustainable business models will endure. And I think it's a bit of a focusing lens of, it's very easy to spend money when everything is booming and asset prices are at all-time highs. Asset and capital allocation becomes very different when when things have dropped 80%. So I think there's the lessons that we learned there is like, what are the true kind of drivers of the business, and what things are important versus what things are more just extraneous.
And so what do you have to change day to day? Because there'd be so many businesses right now that are going through maybe not as significant headwinds, but similar conditions nonetheless. So what would be your advice to how to navigate the high growth and slowdowns from a day-to-day perspective?
Yeah, so from a day-to-day perspective, I would say it's twofold. I think the 2015 to 2022 growth at all costs, money is free mindset, that's gone. So it then becomes, well, where are we smart about spending our money at the end of the day? So, even if you have $300,000 in the bank or you have $30 million in the bank, the questions are still the same. Is this the best use of my money? Is this the best way we are doing things? And how do I give visibility to CEO or wider leadership team or, key stakeholders in order to make them make better decisions? I don't think that really hasn't changed, but what has changed is the importance of fast reporting, fast decision making, because things can be volatile enough that you just want to be empowering the business to make the best decisions that they can with obviously with the trade-offs. You don't have perfect knowledge, you're not omniscient, but how can you present as much as you can?
Yeah. And so we're halfway through the year. I think you stepped back up into the CFO role or SVP. And so now you've made that transition from an external business and promoted. So from a first 90 days or that first part of the role, what's different between the two?
So I think the diagnostic wasn't required because I've been in the business for 2.5 years. But what I think the difference largely is around, the stakeholder management. It's very I think being in that kind of that MVP Finance controllership type role, I think you're able to just focus on just getting the BAU done. I think it's very much more about, how do you move the broader business forward faster versus is my month end going well? And I think it's just that broader lens that you need to bring to the business. It's making sure that you build those relationships. Not that they didn't exist, but it's about reinforcing them as well. So if you're coming into an existing business, you may have built some of those relationships, but they probably don't have the strength that they need to be at an executive level.
Gotcha.
Similarly, when you're joining a new business, you got to build those relationships fast, and you got to reinforce those relationships because you're part of the leadership team now. You need to be you need to disagree and commit. You need to do all the things that allow the business to move faster. And most of that is just basically talking and really making sure that you're getting alignment across a number of different fields.
Yeah. And so what are the main projects, main challenges you're working through at the minute as a business?
As a business, I think, it's moving into what we're calling the commercialization era. The business has very much been around building product for the past few years, but now it's about eking out and monetizing that product. And that has its own challenges. I think, a lot of that is around, standing up things that didn't exist before, looking at how do we play with go to market? How do we do billing? How do we do invoicing?
Yeah.
A lot of things that, that you need to do at a small scale, can be done with, you can hack it together with Google Sheets and, bits
Sure.
of duct tape. But
Yeah.
as you start to grow and as the revenue lines start to increase in an exponential fashion, you're trying to make those conscious decisions between how much investment do I need to do to get the system that will scale with me right
Yep.
now,
Yeah.
which has its own costs, both time and in money,
Yep.
versus how long can I last with my stopgap. And it's those constant trade-offs, which is very much the nature of the beast. So, you can't do everything. I run a lean team. I take the view that I'd rather spend a bunch of money on tools and get some really smart people to operate those tools than throwing a whole
Yep.
bunch of people at the problem. That
Yep.
has its own risks, but I
Yep.
think that you're able to get exponential productivity out of people because you're investing in their ability to be more effective. It's those things that we're trying to solve, but also, how do we look at more of the longer term view? So, in a lot of cases, startups, we generally have a 2-year horizon. It's generally where do we get to the next round? But as you start to mature, it becomes, well, what does my long range model look like? What envelope do I have to develop and deploy capital over a longer period? Taking the view that, what if I just don't raise anymore? What can I do?
Yeah.
And I
Cool.
think it's just that shift in mindset from, hey, we're just doing the build versus now it's how we turn into the larger business that we want to be.
And so where does that look then for the next 2, 3, however horizon you want to give for the business? Where does that look?
So I think for us, it's just focusing on both the revenue and sustainable growth. For us, it's expanding our addressable market. It's a new product that we've put out is growing at an exponential rate, and very much just continuing to make sure that what we've got, the unit economics make sense, and we're able to double down. So again, it's one of those things where we're in both this growth phase, but we still want to be experimental. So
Sure.
we don't want to take big swings at things. We want to make sure that if something works, we double down. If it
Yep.
worked again, double down and double down again, and just keep dumping money until at that point, and really take an incremental approach rather than taking the big swings, which I think was probably the story of most startups over the last 10 years is they took big swings, big capital, knew they could raise in 2 years, where I think the narrative has shifted.
Yeah. Is AI playing much of a role in the gaming or Web3 space for the business specifically, or could be in your space? How's that all looking?
Yeah, absolutely. So I think in a gaming space, I think the statistic was, I think there's 15,000 games were released on Steam this year, and it was 10,000 games last year.
Okay.
And
Wow.
I think that is entirely attributable to AI reducing the cost of publishing a game.
Yeah. Yeah.
In terms of kind of finance, I think the ability for automation and the ability for finance to continue to run lean, I think is supported well by AI. However, I would caution that I think it's more about contextual results and using it for things that don't relate to mathematical type models. So I wouldn't trust it to add numbers, but I would trust it to kind of pull insights out of a system where it can scan data and give me summaries.
Yep.
So it's very much about, you got to be very selective of the use case that you use AI for. But I think the biggest unlock that I've seen and I've seen personally is that I can build automations and workflows myself. So, things that I would used to go, hey, I need a consultant or I need my IT team to do, and it'd take 3 weeks. I can pull up Cursor, noodle around for a couple of hours, and now I have a Slack bot that spits out outstanding invoices directly to the deal owners. So, those are the things where I think the AI has the ability to kind of cut out. I'd say it doesn't cut out the role entirely, but what it does, it allows you to focus on the high value items versus some of the more pedestrian day-to-day things that finance currently does.
So you mentioned lean teams a few times, and it is very much a flavor of the startup life and broader business at all, to be honest, at the minute. So what do you think are the big factors you need to look for to make sure it is a success? Because lean teams don't always work either.
Absolutely. I think the way I look at these is, the different businesses require different mindsets.
Yep.
Like I tend to describe accountants as being one of 2 types. Like type 1 accountant, is very much, here's my checklist. These are things I need to check off, done.
Yeah.
Like that is it. The other one is like, I have no idea what the checklist is, but we'll go figure out how to build it.
Yep.
Like the lean teams require people that can handle 2 things. One, they have a commercial mind, so they can think about more of the broader aspects, not just what's the numbers. And
Sure.
secondly, they need to be able to handle ambiguity because we don't have the answers. AI helps us get hopefully non-hallucinated answers, but we are always constantly struggling with we're still trying to figure it out right now. So if you hire someone that has good technical pedigree, can handle ambiguity and has a commercial lens, you're not going to go wrong.
Yep.
Because they're able to flex to the situation. They know that things aren't necessarily black and white, and they're able to, and they've got that ability to research the answer. The risk that you have is, you get someone that wants much more structure, then that's probably not the right fit for a lean team. You probably want someone that, or you want to err on the side of, people that can just, we don't know what it is, we'll figure it out.
Yeah, that's good advice. Well, thanks so much for your time, Ben. Hearing your story and hearing your journey through some of Australia's fastest growing tech companies has been awesome. So I think that it's been great to listen to myself, and I think the listeners would agree. If anyone has any questions or wants to follow up and get some more detail from you, you open to having a chat?
Yeah, absolutely. Just reach out to me on LinkedIn.
LinkedIn. Perfect. Well, thanks again for your time, Ben. Appreciate the chat.
No problem. Great. Have a great day. See you later.
Thanks for listening to the CFO Track. If you enjoyed the show, don't forget to like, subscribe, and share with a friend. I'll see you